Hey everyone, Delphi Group here with our weekly Tuesday market report. Thanks for being here every week. We appreciate your support. So let's get into what's going on with the markets. We have something a little different we're doing today, which we'll get to. That's very important for everybody. But let's look at the indexes first, and then we'll jump to some other stuff. We can see here our target from last week has hit on the SPY. We now have some red days here, volumes going up and down. Indicators continue to be overbought as we are still in this kind of up-only markets where the dips are being bought. Okay, we can clearly see that. So until, again, this is the daily chart, until we start to see averages break down, this would be a first warning sign. But the bigger warning sign would be, this is a 50-day, is if the indexes start to move and close under the 50-day. Okay, that is going to be our bearish signal, okay? But we are not near that yet. Again, the dips are being bought. So what does that mean? Well, we're going to go, that is a bearish candle now. It's not a bearish engulfing candle because that is not a green candle, okay? But I'm still going to go lower here for the forecast this week, back down to the averages. The 20-day, which is not that big of a move, but it could be for you swing traders out there. Okay, so that's the SPY. Qs is going to look something very similar. Okay, we did put this kind of range box here to mimic this one. Excuse me, on the Qs. Again, our target from last week on the Qs has hit. So we're going to do the same thing. We're just going to go lower here. We do have that is not a pivot on the Qs as well as the SPY, but regardless, we're going to go down maybe a little bit to test that 20-day moving average on the Qs. Look at the volume going up on this move lower below. Okay, CCI moving lower and the stochastic. Okay, so that's the Qs. IWM may be a little bit of a different forecast here. We were on a live call this morning with our members. And we did mention we were looking for a pullback to fill this open gap and the 20-day moving average support, which it already came down and did that. Okay, so now what? Well, we can see that's on lower volume, but again, indicators below are still overbought. We are going to do a contingent here. We would expect a bounce from here, but if not, we do think the IWM will have some room to fall. So this is a pretty big level here. I would say 242 on the IWM. So this is going to be contingent under that, kind of what we did back here, okay, on this forecast here, which we never got the close under that, so we can remove that. But we're going to go on a contingent break here, lower down to kind of this bottom of this shaded area, okay? I will put this orange just so we know it was a contingent kind of play here. But we would expect a bounce here, okay? So I will just go maybe higher as a kind of like a bounce opposite now, remember, of the other two indexes, okay? But just watch out for that 20-day, okay, on the IWM. And then again, last week our forecast on the IWM has hit our target, so all the index targets continue to hit, which you can see here on the IWM, right? All our white targets have been hitting. We're almost like, I think we're over like 95% targets being hit on the indexes. All right, well, the markets haven't closed yet. They're about to close, but we're going to jump to something else now real quick. We're going to jump into Delphi Room again. This is our Discord where we do all our amazing work. And you know, Paul Tudor Jones, anybody who doesn't know Paul Tudor Jones, he is a very, very highly respected person in the markets, okay? He actually called the 87 crash, which most of you are probably too young to remember. I was actually too young. I didn't even start trading then. But he called the 87 crash, and then he subsequently called the bottom of the 87 crash. He called the dot-com top, and he also called the housing market crash. So he's made some incredible calls in the market, so you cannot ignore what he's saying. And what he's saying now is this. He feels like it's a lot like 1999. And would be expecting a blow off top. Okay, this again cannot be ignored. And again, we actually agree with him. You can see we posted that here. Okay, so what now? What does that mean? Well, we're going to go to TradingView. And before I get into this, just a little bit about me personally. Okay, I started trading back in 1995, right before, and there's the market close, right before the internet was even created. Okay, now I'm sort of dating myself, but I am not that old. I started trading at a very young age. And I remember like it was yesterday, back then, I was in my parents' basement watching a little small 18-inch TV monitor, a CNBC. Back then, the stock tickers were not priced in decimals like they are today. They were actually fractions. Okay, just to kind of show you how far back we're going. And I'll never forget like it was yesterday. I saw the stock starting to come across the screen. YHOO was the symbol, was the ticker. And it just kept coming across the screen like $3, $3.50. And I was like, what's going on with this chocolate company? Like, I thought it was the Yahoo chocolate drink. I had no idea what Yahoo was, yahoo.com. No idea what the internet was back then. But I saw the stock going crazy, so I looked it up and said, what's this internet stuff? So, long story short, a week later, the stock was at $80 from $3. Okay, and that's when the whole internet craze blew up. Okay, stocks were going up and down $50, $80 a day. Okay, now I do not think we're ever going to see that again. At least I'm not in my lifetime. But what does that mean? That means that starting to get the feel, like Paul Tudor Jones is talking about, that the end could be near in the markets. And that includes crypto, which I'll get to. So what we're looking at the monthly chart here on the SPX, okay? And you can see what is going on here. This is a complete vertical move. We had a drop that was bought, and then another drop. If you guys remember, this was around. We had that flash kind of dump, and then that was bought and going up completely vertical. Okay, if we go back now, let's go back to. I want to go back to 1995, 96 here. Okay, and again, this is the monthly chart. And what we're going to see here is something very, very similar. Okay, look what happened here. The markets just went completely vertical. And kind of like now, what happened back here? Okay, we had a flash dump here. Again, very similar to now, that resulted in a complete vertical move up. And this, again, was the crash of 2000. Okay, right here. This was the 1999 bubble. Okay, internet bubble, which Paul Tudor Jones is talking about. So I do agree with him that things are starting to feel like that here now in the markets. Okay, and instead of the .com, we are now in an AI boom. Okay, you can call it an AI bubble, call it whatever you want. But this is not sustainable. Eventually, it's the end. The run is going to end. And we're already starting to see crazy moves. We highlighted this, I believe, last week or 2 weeks ago. We put out some amazing calls on sell signals on IONQ, OKLO, and a couple other ones that have just gone through the roof, just way out of hand. So again, we're starting to feel that now. IREN is another one that we just recently looked at. A lot of these stocks have gone up 100, 200, 300% in a month or less. So that is kind of the feel we're getting. Okay, so you have to be careful what's going on now in the markets. Now, I'm not saying the top is coming in this week, tomorrow, or next week. I personally feel that 2026 is going to be a very ugly year across all markets, including crypto. Okay, I am expecting a bullish run maybe towards the end of the year. We might be getting some near-term pullbacks or a breather. It would not surprise me if we make a run towards the end of the year. But again, you need to be careful because things are setting up for an ugly 2026. And remember, when the Fed starts to cut rates, that starts to signal the start of bearish markets. So just be careful about this. Again, don't ignore Paul Tudor Jones. You don't have to listen to us here, but we are starting to prepare for this possible outcome to take place. Okay, so that's it for us on the indexes. Let's move to crypto here to see what's going on. We're having a lot of interesting price action in crypto. We already talked about this on our weekly trade recap. We ended up buying this Bitcoin dip here. We started selling up here. Even today, we started selling some longer term crypto positions. We have a longer term portfolio. We started taking profits, cutting some positions up here. We are not saying this run is over in Bitcoin, but again, we need to be very careful and get ready, because if you see this box, we have this box pulled up. This is kind of our cash out zone. If we do get up here, you can see we got up here a little bit and are pulling back. So what does that mean? A couple things here now. Well, if we see Bitcoin come down and fail to bounce, now very well could bounce from here and head higher, but if we see these moving, sorry about that, if we start to fail, then we're going to say that the bull run is over. Okay, we would need to see something like this, maybe come down and then fail under the averages. So we would say that run is over, but it's still, we still could head higher, but now we wouldn't become bullish again until we take out the all-time high here, okay, which just came in. So we could be taking a breather. This could be leading to something else more, but again, our window is closing, and we've talked about this a couple times. We talk about this regularly for the community, but also here on some of these calls, that we are currently entering the bullish months of the year, okay? So our whole plan all along was to start cutting at the end of October into November, to be completely out of all our crypto holdings, and we're not changing that, okay? Again, we're looking at 2017, which we traded extremely well up until August. We did not get this August move up, and we also did not get this September move down. So what's going on now? Again, here we are, we're entering into October, and I would say we already had the majority or half of this move. Okay, do we get the rest of it? We don't know. Okay, are we going to get an end of the year pump like this? We're not planning on it, but you can never count crypto out. But again, we are going to start exiting all our plays as we enter November, or if we start to see Bitcoin break down, okay? And again, why is that? It's because we see it. We're showing you a couple charts. Now, full disclosure, this is not our work, but very, very important. You can see the end of these boxes where the tops in Bitcoin, which ended up leading to the bear market, okay? We are entering that right here. This was taken a couple weeks ago. And if we look below, that date is October 20th. Okay, remember this date right now. It's very important. This box ends on October 20th. Now, look, nothing's guaranteed or going to play out the same. But again, look at the rational route. If you don't follow them, I would follow them if you're into crypto. Very in-depth analysis. We are now, again, we took this maybe a month ago. We are now well into box one. Box one has been the top leading to the bear markets, okay? And if we look below, where is box one here end? October 20th, okay? Again, these are two different charts from two different people, both with the same date, okay? Is that a coincidence? We don't think so. So we're not saying the top's going to come in October 20th, but this is when we're going to start to really, really exit our profits in our crypto positions. And again, another chart to kind of show you visually where we're at. This red box is the start of the bear market. We could see here the top, which has led down into the yellow, which is the end of the bear market. Okay, and again, when is that? The end of the bear market, we are looking at the end of next year, 2026. But again, here we are. The red is in October, so here we are. That is why we say the bear window, the bullish crypto window is fastly closing. So these next couple weeks are going to be very, very important to keep a very close eye on Bitcoin. What it's doing, does it take out the all-time high? Does it not? Does it head lower, fail the averages and head lower there? All these things you have to watch out for, and these are all these things we're keeping our members very, very alert to, okay? As well as a possible start of a bear market overall for all the markets next year. So I hope you guys enjoyed this. Please like, subscribe, get the word out that we are here, and we will see you again next week's call, next Tuesday week's call. Take care. Have a great week trading.